What's your view on cryptocurrency, blockchain, Bitcoin, and the implications of all that?
When cryptocurrency started to gain prominence in, I think it was 2017, I came out as very negative. And if you read my memo, you'll see it's discussed briefly in there. But in the spirit of what I discussed with you today, with my son's help, I now look back and see that I was unduly skeptical, in the sense that it was a knee-jerk reaction. I've been so successful in the past, taking a jaundiced eye toward financial innovation and calling insubstantial things at the time, that I immediately applied that to cryptocurrencies because they don't have cash flow generating capabilities. They still don't. So you can't talk about or compute anything like intrinsic value. But I came out very negative before I knew the whole story. And the important story is about cryptocurrencies is not a value investing story. Again, no intrinsic value, no cash flow generation. You can't say what crypto is intrinsically worth, but it's a supply and demand question. And it's a uses question, and that there could be supply for coins because of what you can do with them, even if they don't have cash flow properties. So I'm not positive on crypto coins. It's just that I now view my past negativism as having been knee-jerk skepticism and thus premature. And I haven't learned enough about Bitcoin to be able to decide which case I prefer. And since I'm a value person, it may not be easy to get away from that, thinking about cryptocurrencies. But the answer is I'm not making pronouncements at this time. I got smarter in the last 4 years.
The mindset, that you sort of tried to exhibit, I guess, during these debates and chats, you're obviously established in patterns of thinking, successes over the years. Can you speak to that, sort of as you began to change your mind on a few things, describe some of that for us?
Yeah. Well, it was really very intense actually living together. And, we started off probably the opening was through Bitcoin, because, he said, well, why did you reject Bitcoin? And I said, because it has no intrinsic value. And things with no intrinsic value cannot be invested in intellectually, analytically. That, the only form of intellectual and analytical investing is where there's an intrinsic value to anchor to, so you can compare the price. And so he said, well, what about Jackson Pollock painting? It has no intrinsic value. It doesn't produce cash flow, but would you like to have one? And I said, yeah, I wish I had one. So why would you want it? Well, in part because it's attractive, but certainly in part because I think it's going to go up. So the point is, people, lots of people make money trading things that have no intrinsic value. 6 or 7 years ago, we bought half of an oil trading company. Now, how can you make money trading oil? Oil has no intrinsic value. They make money incredibly steadily. So I think that was kind of eye-opening. And, I am impressed by the argument that there's no reason why you should be able to get an edge based on the readily available qualitative information about the current. And I'm a believer in market efficiency to a large extent. I believe that there are efficient and inefficient and less efficient markets, and there's every reason to think that the U.S. stock market is approaching efficiency. Now, of course, the value investors think that it's biased against them. And I do think that there are trends, popularity. Ben Graham said that in the short run, the market is a voting machine. And people have been voting for tech recently. But the question is, how much is that going to change? If you knew the real tech winners, I think that they would have a great future. The question is, can you know it? But anyway, this was a very evolutionary process over the course of, well, I guess it started just 13 months ago. He moved in with us on March the 13th of last year. But I think open-mindedness is a great thing. As you will remember seeing in the memo, there was one great value investor, famous value investor, I don't like to use names, who did very well in the tech bubble especially in 99. And 99 was a horrible year for value people. I think it was the worst year in history for, but I think that the growth beat value by 2,500 basis points in 99, as I recall. So I ran into this famous value investor who had a great year. And I said, how did you do it? He says, well, I was lucky. I had Amazon and I had this and whatever else he was talking about, maybe Apple. And I said, well, how can you own those as a value investor? He says, they look like value to me. So I think it's a question of just opening up your mind as to what can constitute value. It doesn't have to be in the present. It doesn't have to be absolutely predictable and quantifiable. It makes it harder when you venture away from the quantitative and away from today. But I think you have to get that edge.